What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson, and on Fridays, I bring a co-host into the mix. It is a younger but better version than me, Charlie.
Thank you, Dad. It's such an honor because you're right. I am a better version than you.
Yeah, and a more humble, obviously. If you're new to the channel, do me a favor. Click the subscribe button, hit the notification bell so you get the alerts and the updates whenever we post our daily market commentaries to the video. Go ahead and let's dive right in. S&P up this morning, huge. We're up 3% on just a wave of good news. There's the news around potential antiviral treatment from Gilead Sciences. There's the Boeing is increasing production or restarting production in Seattle. A lot of news just drove the markets up at the end of the day yesterday. And starting at the S&P, we had a huge rally up at the end of the day. Rallied us up into our supply level, and this is one where if you took the limit entry on the supply level, it was probably a pretty decent entry, but there's no reason to take the limit entry. And the reason there was no reason to take the limit entry is because our 4-hour did not give us a lower swing low. We were looking yesterday in our live trade room at this blue line. This blue line would have told us that I got a lower swing low and a lower swing high. Well, it didn't. And that meant that everything we look at for supply has to be a confirmation entry. So we popped right through here with no confirmation for an entry. And so now we've come up on this, 1 minute, 1 hour, on this gap up to this level up here. So Charlie, what do you see up here with this area?
Well, what I see back down at the bottom when it shot up that big candle, it looked like they got a good rally up, but then they closed and then they're starting up again. And then like there's a
I think there's a little bit of a ceiling here at this 2885 number, where if we break through the ceiling, what happens?
It's going to keep going up until it breaks through the other ceiling. And there's a good chance because at the end, there's a little tip of the candle that's going up.
Very good. So if it breaks through the ceiling, we believe price will continue to go up. And by the way, that's because our 4-hour trend is still bullish. And we would look for our next area of supply in the 4-hour. May not be until this 3,000 mark. So I think there's room for us to run. So, all in all, now I was telling you that we had a slowing of momentum in our 4-hour trend, but the thing to remember is just because we have a slowing of momentum doesn't mean that the market has shifted directions, and we had no confirmation to get into any of our short positions. We were only keeping our eyes peeled. The way I think about it is if there's a 40% chance of rain, it makes good sense to bring an umbrella, but it doesn't mean that I'm going to cancel my plans. Right? So when the big picture trend is up, but I'm slowing momentum, I'm bringing an umbrella, but I'm still buying on pullbacks to quality demands and looking for good breakouts. Very good level in the NASDAQ. So the NASDAQ yesterday, we talked about a breakout, and we actually did have a breakout area up here. Now, if you took the breakout in the NASDAQ, your stop was below here. This is where your stop had to be. If you took the breakout, you got one pullback, and then it rallied up a bit higher. And you actually, if you did stay in on this one, you got a really nice run later in the day inside of the NASDAQ.
What I think about this one is that it's very, very, very similar to the ES. So we have that big rally up at the bottom, and then it closed, and then we have that little rally at the top. And then, look, at the end, we have the 3 candles exactly like the ES. Well, not exactly, because that last one is red, but it's the same form.
So the other thing to consider in this is that when we did rally up, if you miss this rally up and you want to get long on a pullback, the hourly chart here gives us a pretty nice wick over wick. And this wick over wick here is just above the pivot low. And this is in both the NQ as well as the ES. So if I pull up both of them, we will see that it exists in both of these markets. So you have these wick over wick levels that exist in both of these markets just above that pivot low. All right, moving over to crude oil. So looking at crude oil, we see that crude oil had a huge gap up. Well, this was a contract rollover gap. Matter of fact, if I actually just do the contract specific, you'll see that there's really no gap that exists, right, on the contract specific market, because the June contract was always significantly higher than the prior month contract. So we did see this is where contract rollovers become important. So here's a couple of questions to ask ourselves. We did get a move up above what we were looking at for a potential breakout, but certainly no ability to enter on that breakout because you're trading that particular contract. This gap actually is still going to be valid. Contract rollover gaps do still matter. And so if we come back into here, this contract rollover gap will still matter. Now, what are we looking at for today? Well, what I'm looking at for today, if I go in and just look at the contract specific, you will see that our contract specific is still in a very big downtrend, even though we had that gap higher. But I still want to put a line right here at this $27 number to tell me that I think we could get a little bit of stall above, we could get a little bit of, if we get basing above 27, we have a little bit of room to run up to like 27.65 because there is some resistance up here. But that would get us a higher high and a higher low. So I think that resistance would be broken through. So I'm going to let that one carry over to this contract. And so if I get basing above 27, then I'll be interested in seeing, okay, what does this look like? So keep an eye on this area later for today. Next, we're going to take a look at gold. And gold, we can see, which direction is gold going?
Well, what I think is that it started to go up big mountains, and then it kind of went sideways, except with the upsides. And then its last move up was right there, and then it's gonna come back. Then it's gonna come down. And okay, I don't know what those weird lines are, but it's probably gonna hit those if they are a floor. Oh, wait a second, the blue lines are floors. It already hit it.
Right, the blue line was the floor. And so we actually did get our breakdown in gold as we were looking at this yesterday with our slowing of momentum overall. Now, these weird lines, as Charlie says, this is our area of demand, and we hit our 15-minute demand area and got a little rally up. So if you missed the breakdown, you actually got off of this demand area a bit of a retest in this move. Well, what has this done to us in our 4-hour trend? So in our 4-hour trend, we've actually put in a lower swing low and a lower swing high, telling us that all of our demand areas should now be confirmation entries, and all of our supply areas should be what we would look to enter in. So as I look a bit higher, let's go to the 15-minute chart. I don't see any super clean supply zones up here, but until I come way back into this region, none of these are very clean. So I would look for probably some sort of candle-to-candle entry to give me a good re-entry on these positions. All right, moving over to bonds and currencies. So in our bond markets, starting with the ZN, our ZN market, we were looking at a potential breakout above this area here yesterday, and look at how close we came. Based in front of it, didn't get the pop, and then at the end of the day with the news in the market, we came screaming back down. Now, I will say this one was a very clean, just a good old-fashioned stop out as it came into the level and then just continued to pop lower. There was no reason to be a buyer at this. There was no reason, not to think about being a buyer at this point because our big picture trend overall was up. Big picture trend was up, and we did have that pullback. Now, I say it was up. It was a little bit, kind of on the sideways price action. The only reason you would not have bought was because it was in the Globex session during that post-market area. Now, we have rallied up since then in the overnights. I think at this point what it makes sense to do is to stand pat and really not do a whole lot on this piece. All right, so let's move over and take a look at the Aussie. So our Aussie market is in between our area of demand and our area of supply, and it's really going in a sideways price action. This is really the kind of market that it makes sense just to sit back and wait. Got a little gap up yesterday at the Globex shift, and now we're in between demand and supply. Nothing really to do in those Aussie markets. In the euro, we had our breakdown in the euro trade. However, the breakdown didn't really give us any basing before the level. One of our rules is that I need basing immediately before the level. We didn't get any basing immediately before the level. However, once we broke through that floor, that was not a false breakout. It's just not a breakout at all. But it gave you the opportunity to get short on the retest. And the retest was this wick over wick area. So remember that if our trade doesn't score properly, and we use what's called the trade optimization plan to score our levels, if the trade doesn't score properly, then we're going to on a breakout, we're going to take the retest. And that's exactly what happened here. So now our trend is continuing to be down. And so we're looking for shorting opportunities. We're actually coming into a really nice wick over wick area right now. So if you wanted to even look at this area as an opportunity, and if you want to be a bit more conservative, you can go a little higher right into here. Although this wick over wick is a pretty clean level. If you want to get short off of this level coming back down, I think you've got a good target right here.
All of those swings are, well, there was a lot of swings there from starting at the top of that highest mountain there. Oh, and look, it went, this one went up and up and up, and then it came down and down and down and down, and each swing is lower. So that means we're probably going to go down.
All right. Well said, Charlie. So let's move over looking at the Canadian dollar. So in our Canadian dollar yesterday, another example of we had a breakdown, but we didn't get basing immediately before the level. Price was looking like it was going to break down here in this, before the opening session. The market rallied up yesterday as the market opened up, and then it just sold off immediately. Didn't give us any basing in front of the zone. Now, as far as a retest goes, rallying back up, if you wanted to try to get short on one of these levels, there were none of these clean supply zones for a short retest. And now we've rallied back up and are coming back down. So, yes, we broke through this 70-73, 70-77 area here. And I think that there's still a chance we could base in front of here and give us a breakdown. But for now, I'm going to remove this level. We have a couple of wick over wick zones above us that I think are worth paying attention to. As it stands right now, I'm just going to look at our most recent supply, which would be right in here, as our most probable reversal point. Last two markets, Great British Pound and Japanese Yen. So when I go to the Great British Pound, very sideways in the price action. Not a whole lot to look at in this one here today. Possibly this area right in here for a little bit of a short. Remember that anytime you're trading in a sideways market, it's a little bit lower probability. And then the Japanese yen, we see that we have popped. We hit a confirmation short, got a little move away, and then it jacked right up out of that zone before then coming back down. So that Japanese yen level. So a couple of little stop outs yesterday overall have now put us between areas of supply and demand. But I'm okay with that. And the reason I'm okay with that is because if you've had one of those weeks where you were able to pick up some of these trend-following trades, you've done very well for yourself this week. The yen Q is obviously our best one from yesterday. And looking at some of these levels over the ES, then we see we are heading into the weekend. So make sure that you know heading into the weekend, you got to protect your profits as you move forward. And if you have any questions, as always, send us an email, support@tradersarmy.com. I want to thank my co-host Charlie for joining me today.
As you said in the beginning, the better but younger co-host.
And obviously more humble. I hope everybody has a great day. I'll see you soon.
Bye.